This is Eric Mwathe, themwathe.com, December 11th, 2008. The market's been trading in a tight range and currently trading around 49 points lower for the day. And on this video, I want to bring the idea back again that the odds, especially starting from around this time, probably today or this week, early next week maybe, the odds are starting to turn around to where they are heavily seem to be favoring those who are short the market. And I know it's been tough if you're short, you know what I mean, right? A lot of people have been drawn into the market because the market was moving out of downward trading channels. I mean, that's pretty obvious, and they had a nice bounce on the upside. But now I see the situation where this market is going to be headed lower. And in this video, I'll show you some of the stocks that you should be watching for the upside. And now the question becomes, do you hold this for a day and a half? And I really don't know, but I'm starting to think this is not even day one of this turnaround in the market, where now the shorts have the upper hand. And I know you shorts are scared, and that's why I have conviction that this has a possibility of working, because it's only when we start giving up on a position that the psychology changes, because now everybody's out of that thought process. For example, I'll give you dryer ships, DRYS. Stock traded 130 mid 2008, and at some point late last month, stock was trading at $3. Nobody wanted to own the stock at $3. I mean, I know I did not, and probably you didn't. And the stock would go on to rally in over the last 2-3 weeks, moved from $3 all the way to around 11. $3 to 11. That's a big move. Why did we miss it? Because we were scared of the position. So shorts are scared. They've been squeezed. It's painful, and nobody wants to own stocks on the short side. But yet, this might be when we have to just suck it in and go short. And I'm going to try and bring forth the case why that makes sense. Now, they're just odds. Please understand, the market eventually decides. These are just odds I'm trying to show you. If it works out, then we stand to make some good profits. If not, we'll take small losses and move on. It's a process. So let's look at the charts. Okay, first and foremost, okay, alright, here is S&P 500. Now the S&P 500 obviously moved out of this downward sloping channel. We have an upward moving 13-day moving average, and we seem to be stalling just under the 50-day moving average. That's why you have this indecision in the market. Some indicators are turning up, and some longer-term indicators are headed lower. There's a confusion. Market itself as an energy system is just trying to decide so which one is of the overriding factor, and that's why we've been trading in this tight range right here. One way we can know for sure that the market is really looking to sell off. Oh man. Okay, is if we move below today's lows on the S&P 500 around 85, which are the lows around the lows for the week. If we can move around lower below that point right there, then that means that the market has given up trying to move above the 50-day moving average, and we are going to be headed lower. How far down do we go? I don't know. I just know the likelihood of testing, taking back, at least if you take that move from the lows to that move, we might, move down 50%. So somewhere around 830 on the S&P, maybe, for starters. If we take out these lows around here, then I would look to see whether we go to retest these lows. Now, I don't really care how low this market goes, as long as we can play it. If it lasts for 2 days, 3 days, 1 day, as long as the signals keep telling us to stay short, we'll stay short. If the market turns around in 2 hours and the signals turn around, then we also have to consider taking closing our position. Now, Okay, so what else do I see on this chart? I see that we are just forming a small double top on the S&P 500. I don't know that you can see it, but if I zoom in, you'll see it's forming something like that. That's usually a turnaround signal, not the clearest. And don't forget, we are still at 50.48. Any drop below 50 has a mathematical inclination to have a big drop, because for you to introduce a new number to the average and to take the index below 50, you need to introduce a huge number. So the next move is going to be below 50. If we get it, that's going to be a big down day whenever that happens. I think that's it on that chart. Let's look at the all right, it's taking a while for my stuff here to work for me. Let's take a look at the Nasdaq 30-minute chart. You see this wedge, kind of a flag formation. Earlier on in the day, we were trying to break out, and I was just about to actually start playing some of the long side, but that stalled, and now we are still stuck in this. Even right now, we are still stuck in this price range. For us to really see that the market is going to deteriorate technically, we do need to see it break that these lows which have held all week. If we can move to lows for the week, then we know that the market is for sure losing momentum. And we also see that this hour we are breaking the RSI support line on the S&P, on the Nasdaq 30-minute chart. So this RSI support that has held for a while is starting to crack, and that's the first signal. Sentiment changes before price, and so that's the first signal which changes the sentiment, and the RSI does measure the sentiment more than anything.